Good evening, Wizards, and welcome to episode 6 of Wizard Wednesdays. Now, things have been getting a little bit exciting behind the scenes over here at CryptoWZRD, and it's getting quite intense, to be honest with you. And I'm very excited to slowly start revealing different features and elements of the course and the website and all of these crazy things that are happening behind the scenes. I will slowly but surely begin to actually reveal these and start providing some teasers for you all. I know there's been a lot of questions regarding the course and many other elements of what is actually going on behind the scenes, and to be honest with you, I am preferring to just keep that all hidden and secretive for now because I'd rather it be a surprise. However, with the market being so volatile right now as well, it's been a constant battle for me to, as you can see on my Instagram, focus on the book, for example. Just breached that 21,500 word barrier. I'm really pushing to make this just a very impactful addition to the overall course itself as well. But with the market now acting so volatile, it's a constant battle back and forth with what's going on. But we are getting there overall in the long run. So I thought, whilst I'm providing so much education in the background, which you guys have not seen yet, why not convert the educational content as well at the same time into the Wizard Wednesdays and also the podcast, where the podcast, as you know, are now very psychological based and very philosophical based. And as for the Wizard Wednesdays, I've decided that alongside covering, for example, Bitcoin, Ether and XRP and just overall market updates, I do believe there should be an educational lesson or something to bring home for the majority of those lessons. And I feel like introducing you guys to new insights, new elements, even different ways to look at the market could provide even the slightest 1% improvement in your trading or investing, which in the long run will benefit you guys as well. So the plan is to educate, the plan is to spread the love and share the positive energy, and I feel this is a great way to do so. So goes without saying, let's just look at CoinMarketCap very quickly before we get into a quick recap of BTC, XRP and Ether as well in particular. So looking at CoinMarketCap right now, the BTC dominance is creeping to that 52.3%, which has been pretty solid at 52% for the past few days, and even for the majority of the week. We managed to drop down, as you guys saw in the prior episode and even in the Telegram as well. We were hitting that 50% region and even dipping slightly lower. To see it bolster this high back up is why, yet again, the majority of focus has been on BTC, because right now it is controlling the market. And as you may have noticed, the XRP, which is something I'll cover straight away off the bat, did unexpectedly explode a bit more than the others today, as we can see spiking to our actual first upside target, which is great. Hopefully you guys have made some money off this as well. I'm still cautious of the downside, which we'll be covering throughout the majority of this video as well. However, target 1, TP1, 34 cents, absolutely smashed, rocketing from that region as covered in the prior breakdown as well, not just the Wizard Wednesdays, but the prior breakdown. We've been targeting this region for a while now, for the past week, after seeing it sink below back to this trend line. As you can see, the trend line's holding well, confluence with the main overall trend line. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, pretty much. There may be a few more I missed there, but the main trend line and the overall weekly trend line has been holding significantly well. And as we can see, it has been bolstering price back and forth from this region, so it's good to see it has caused a nice upside surge today as well. Now, before we get into this properly, I just want to note that XRP, the reason we did predict, and looking at this 4 hour, we could be seeing another attempt now to actually breach that level here. Looking at XRP in particular, the reason I've been a bit hesitant on actually trading this is because it's been a bit of an inverse correlation for the past 2-3 weeks. It has not been moving too well in sync with the rest of the market. As we can see today, it's now at 3.19%, and the rest of the market is still doing well, but not as good as XRP. And I've been saying this because, seeing as how low it's been pulling back the past few weeks in comparison to the others, it was well overdue a movement far ahead of the rest of the market. And this is actually a very good way as well to just catch what potentially could be a much bigger mover. Unfortunately, Cardano has not seen the same results. This was slightly pulling back as well. Tezos is just on a mission right now, doing very well, almost 10% up for the day. However, Cardano is one of the similar ones moving in line with XRP, kind of restricting its movement, not doing as well. And now XRP has absolutely exploded. So Looking at this 4 hour now alone, we are looking at a pretty good potential to at least retest that 0.34 one more time. And again, it could very well lead back up into this box region over here. But for now, I am not dwelling on that just yet. I want to really see how this pans out. Looking at the 1 hour, perfect landing on that region. Huge reversal candle on that region as well. Failure to break above 0.338. 27, give or take, around that level. Now we're seeing another attempt higher. Could be seeing some consolidation around this region and another attempt of 0.34, but I do believe this will be way short-lived, resulting in a much further pullback. So again, we'll get into this a bit further in the lesson on some of the content in the Telegram recently as well, because this has been a big topic I've been wanting to discover. And the main lesson I will be covering today is the purpose of almost trying to counteract your own trades with the downside or upside possibilities, vice versa, going against your own overall trade, medium to long term, and even short term bias. There can be intraday biases which can massively impact your overall trading and swing trading decisions. Using these current market conditions right now, I would personally be swing trading versus trying to catch small movements of $100, $200. Yes, these pumps are great, and if you are willing to try and attempt such breakouts, that's fine. However, this movement was called from around this region here, so if you have made a profit off this move, I would suggest moving your stop loss to, I'd say, actually about 20-30% profit, and even taking off 50% off this trade after such a significant movement, because I'm not convinced just yet this is going to continue bolstering. So I am being a bit hesitant with the way the market's moving right now, but let's just start off with BTC and the overall market trends anyway, and the overall market analysis, and then we will start covering the likes of manipulation and many other factors as well. So the BTC chart has now died on me. Let's hope that refreshes. We'll also update Ether. In the meantime, I'm not sure what's gone catastrophically wrong here, but at least XRP is still functioning. There we go. So let's just let this load up. Now you will notice, first of all, there is a massive black arrow pointing down when I said we are potentially going to $6,000 next. Why would that arrow be there? Well, this is actually the main purpose of this lesson, and the purpose of the lesson is to discuss the counteractive trades that I actually maybe not place necessarily, but I'm always prepared for the absolute worst before actually reaching my overall upside target. So what we've been projecting on BTC is the $5,800 to $6,000 region, potentially peaking around that trend line there. And by all means, I believe all of this is absolutely still underway and still in play. However, when we are looking at this region, we are looking at what could be a week or 2 weeks or even 3 weeks or a month. We do not know how long this upside explosion can take. All we know is it's well overdue a correction, at least up to around $5,800. Now, if you are swing trading or even day trading, let's just say you enter here upon a breakout, or even where we are right now, and you place your stop loss here, just below price action, or even below this candle, expecting price to rocket straight upwards. Unfortunately, cryptocurrencies do not work that easily, as we have seen here, with this huge spike up to $5,500. When we caught the initial trade from this region that I covered here, from the daily candle closure, let's just use a risk reward tool as a theory. I believe my stop loss was around here, and the target was all the way up here, obviously, but we peaked at around this level. That is almost 600 pips in Forex terms. If you guys know about Forex and stocks, 600 pips is absolutely ridiculous in a matter of 1, 2, 3, 4, 5, 6, 7, in a matter of 7 days, so almost in a week, 600 pips in pretty much one trade alone. That's absolutely phenomenal, and only something you would see in Forex on the likes of the more volatile pairs like gold, oil, or the Japanese yen pairs. So such a significant movement like this, it never normally goes straight upwards. And the reason I told you guys once we started breaking out of this level to move your stop losses higher was because I expected this level to hold up fairly well. We covered these reasons in many of the prior videos, not just Wizard Wednesdays, so I will not go into it too much, but the matter of fact is security must be monitored 24/7 in this market, because going up to a level does not always mean it will just continue rocketing in a steady motion. As you can see, before breaching higher or lower, there are huge Goliath swings, which I will be using the daily chart more often to identify for you all as well, because as you can see here, before rocketing to this move up here, what you're looking at is a slow decline, rally, push up. Oh my god, it's breaking higher. Is it going to break? No. absolutely died from $4,200 down to around $3,800. A fairly significant move, if I actually say so myself. A $400 move is nothing to take lightly, but when you look at the overall market movement, it slowly climbs higher and breaks out. So using this as a good tool, let's just say a $400 movement, give or take. It looks absolutely huge, very common as well, by the way, if we just duplicate these. I'll be doing this a lot, guys, just duplicating and showing you how many times price moves in repetitive patterns. And looking at this now, from where we are here, or even from there, we can see it lines up pretty nicely with the downside region here of around $4,830, give or take, even $4,850, whatever you feel more comfortable looking at. Just below, we have the huge long-term moving average, which will be disclosed much further very soon, located around 4,700 as well, dipping just to 4,770. So there are clear daily longer term targets in play here, which can be detrimental to the overall trend. Now, the goal of swing trading in cryptocurrencies is not to necessarily try and catch breakouts, because breakouts are a one-way ticket to disaster. As you can see here, we had a huge breakout. If I go to the 4 hour, we actually broke above this region, trapping many people to buy. We then pulled back, spiked, fluctuated, and slowly made our way higher. Now, looking at this overall, the way we've seen this price action working before, I will now get rid of this, get rid of the risk reward tool, and go back to this box over here. Drop down to the 4 hour, duplicate this, and drag this over there. Now, if I just get this out of the way, what you can see here is before we actually broke out of this region, we had a breakout, a massive pullback to even lower than the original box region. Seen it a few times here as well. And then we've seen it again. It broke through, just as price did here technically, if you could carry that down there. I'll just consider it here for now. We then broke out, spiked, rejected all the way down to the box, exactly where price has been stuck within for ages, mimicking pretty much exactly what's going on here. Now, the best way to really identify traps in the cryptocurrency market is to simply look at where past manipulation has occurred. Wicks, 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 wicks galore, spikes down to this region, 1, 2, 3, 4, 5 times over here, potentially even 6 if you consider this. Now, going over to this side here, if you extend this out from where that line spiked, you can see 1, 2, 3, 4, 5. You can actually, well, there's many there as well. You are essentially using future price manipulated zones to predict where price could be spiking again. And it's no coincidence that region did actually close here and then reverse higher. So what I've done with this box zone was I had it here. We then saw a breakout, looking like a closure. We then had a rejection. We then broke back in, tapped this region, and climbed higher. Now, this has been happening many times before, where it breaks through, it rejects, looking like it may hold as support turned resistance and melt down. However, price ends up just closing and coming straight back into the same trading region. So all I've done to account for this new pullback was drag price even lower to where the candles closed, and Lord and behold, all of the wicks were accumulated in this region already. So if we actually just looked at prior price action in advance, we may have been able to identify such movements. Now, when it comes to swing trading, the only way you should really be holding out for a very long period of time, and even then it has to be very cautious, is because of this. Looking at these movements, even when you see a huge upside movement, unless you are catching price breaking out from the absolute very bottom of a huge candle, you are putting yourself at considerable risk, especially when you consider the overall market trends as well. So looking at how price has been before, should you have bought on this breakout and held your stop loss nice and tight, if you didn't take profits or even move your stop loss up on a move like this in a single day, you would have been in for a very bad shock when it absolutely melted. So having a very large candle like this does not always mean it will rocket even higher. As we can see here, we were mimicking at first movements like this, volatility, but we never really broke out. The reason for that is why I am now technically scared, not scared so to speak, as I may even enter a short position off this very soon, is looking at how much it's like just bouncing up and down. It gets me thinking there could be more manipulation to come, because again, using the theory from the past Wizard Wednesdays, using the floor, for example, the floor has been pushed higher, it's been spiked down, we've had to start fresh, and now it's just peaking back at this level again. So we are seeing a weakening momentum coming to play. And looking at how price has really been reacting before as well, if you do not see a straight upside breakout, that means the bulls were not able to overtake the bears as efficiently as we originally expected, and this is so important when it comes to trading. So let's just quickly cover these potential levels, and then we will start covering why this is actually so crucial and why I'm actually looking at certain specific levels as well. So first of all, with BTC, again, the upside potentials remain. I'll clear this up now. Whenever we're posting in Telegram, or whenever I'm posting in Telegram, a potential medium or short-term upside target, the levels I post as potential manipulative regions or caution zones are so you can be cautious and then use your own analysis to either catch a counter trade intraday, so you can have two trades running, long and short, which is what you can do with the Hugo's Way platform if you guys are all using that. If not, you can always use BitMEX. Now, when it comes to Bitcoin trading, although I use Hugo's Way quite a lot, I do prefer and do actually recommend using BitMEX, especially if you've used the fees discount and stuff as well. It makes it a little bit cheaper, as the spreads and the swaps on Hugo's Way can be quite hefty as you slowly start increasing those lot sizes and holding those trades overnight. It can get quite significant, whereas BitMEX does offer that little bit of a discount just to benefit you a bit more over those overnight holds, etc. So looking at this now, why am I potentially looking at this box here? Well, the reason being is, first of all, price has been inclining. We had a huge spike, and we were projecting the $5,280 region to be met upon a breakout. So there has been caution the whole time. With stop losses, for example, I would have recommended having them at least down to here because of a potential downside spike. And that is why I'm very glad to have seen price rocketed. If you guys were on board this trade, we have now met take profit 1. The only real concern for me is the fact we have this level just above as well, where price has spiked prior. However, we have seen this many times over. At least a significant pullback to the outside of this box could be sufficient to dictate a further movement higher. But then using prior price action as well, we've actually seen 2 candles close upon a breakout of a box before and then rocketing higher. But the wick did spike all the way down to the bottom. Now, judging from how this is handled before from the first pullback, I do believe this could be a false breakout that could maximize its peak around 5,370, give or take. I do not see this really breaching much higher than that region where we have marked out here. I do believe if it does actually tap it, it could mimic a very similar movement to this, where it taps and it pulls back, potentially even spiking here, guys. I'm not even joking. Looking at the Goliath movements on these candles, let's just say from here to there, when we drag that from where we are now, you can see it pretty much drags its way down. It always looks very insane when the price action has not yet unfolded, but using this 4-hour time frame perspective, 4, 8, 12, 16, it took less than a day to see one huge movement like this straight down to a target before slowly pulling its way higher. The crypto market does not care for your feelings. It does not care how you feel. It does not care about your technical analysis. It only cares about what it wants to do next, basically. And it does not have a personality. It's controlled by a very select handful of people who are obviously manipulating the market. So they do not care less about how you feel or if you're right or wrong. If they want to dump the market, they will dump the market. Looking at this now, this is a overall long-term trade. Hence why we are targeting the $6,000 region. So when you put that into perspective, you will understand that the majority of people, even going off other traders right now on Twitter, Instagram, whoever they may be, they are mostly favoring an upside bias now. However, what does that mean? That means the majority of people, and plus the news are coming out right now. The news is bullish, 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 bullish. Everybody is trying to catch that long to $6,000 now. It wasn't as easy to predict over here, but now we've seen the breakout and a slight sustain of this level. People are favoring longs, which means stop loss hunts are always going to be occurring, which it happened exactly here. Now that realistically, if I go to the daily time frame, if I had just held my trade here and kept my stop loss just below, I would still be in a huge profit. However, looking at the risk of this trade, now let's just say I put my stop loss at break even, just here, for example, or just above in profit. That spike from there to there would have wiped me out, and before I could probably even re-enter, it would have whipsawed back to the upside. I would have been holding a trade for over a week and a half only to be absolutely annihilated once it pulls back once and reverses back into profit. So this is why I always stress the importance of breaching that stop loss higher with every increment of movement, because when it whips to the downside, you can take your profits at pretty much the high. That's why trailing profits, not automatically, but manually trailing your profits, your stop loss, to a realistic region is so important, because let's just say your stop loss started here. We'll make this red to indicate what would have been a stop loss. So let's say I entered my trade here, stop loss was originally here. I now slowly but surely breach this higher. Price then whipsaws up, and this is exactly what happened on that trade. It whipsawed up, I moved my stop loss up here, it reversed back down, it spiked here. I entered one trade, I put my stop loss all the way back here. Realistically, I took a huge move from here to there, wiped out at pretty much the absolute highs, securing almost every single bit of profit on the way up. So it came down, I've taken pretty much all the profit from this entire move. I now have more money in my account. I've secured my money's worth out of this enduring, I guess you could say, endurance of a trade. Price pulls back down almost to my exact same region. Now I can re-enter again with either a slightly larger position, or even a smaller position, or even the same size, reducing my stop loss here, minimizing my risk, and now I have more money in my account to actually endure another technical risk on this trade. Now, looking at where it is, I've pretty much gone back to my original entry level, but still made, in this instance, thousands of pounds and dollars in this one scenario. So if you think about it, you're literally catching a movement, waiting for it to correct back, but you're keeping that stop loss secure. The same as it's going now. If you are trading along off this trade I gave here, you are going to be in a very significant profit. And using the quick calculator for pips on this overall movement, right now you're looking at 230 pips in a matter of a day and a half. Now, originally my stop loss was here in the matter of a risk, but knowing that there is a potential downside risk, I'm not willing to hold out and actually lose money knowing price could spike lower. I would rather get out, slowly incline the stop loss here, maybe, for example, just below the prior daily candle if I wish, or if you are a bit like my personality style and you want to just secure everything. Because this market's so volatile, guys, you cannot really think of logical levels. It's best to just keep it where you are happy with taking profit, because if you put it just here below the spike, it's very likely it will still spike lower. There is often many irrational times in this market which will not follow the overall bias of technical analysis. So why take that risk? Why leave it just below here when it may go to there, but it will just spike a little bit lower, and you've missed out on an extra 50 or 100, 200, or even a few $1,000s depending on your lot sizes by simply just trying to outsmart the market. You can never outsmart the market, but the purpose of this video is to aid you in technically almost getting there as best as we can, and that is the first stage of doing so. That is with your stop loss placements. Now, looking at where we've rejected, preempted level, highly anticipated, we were expecting to break out from here. Let's just say your stop loss from the entry here is now up here. Let's put it there, sorry. Now you've seen the spike. Price is rejecting this level, 1, 2, 3, 4. There are many wicks now rejecting this level and what looks like a false break lower. These huge wicks here are signifying to me there are more attempts to go bearish. So the reason being, if you are obviously targeting this level, here's the beauty. You can now start projecting potential downside targets where it's happened before, because the going has gotten too good. The saying goes, especially for ICOs, if it's too good to be true, it probably isn't going to be true. I covered this on Instagram today for ICOs. Now, the same goes for trades. If you have entered here and it just keeps going up, do you really think it will never return? It's the same way when the bull run happened, BTC at $20,000. People were buying at the all-time highs because they believed it was too good to be true. They actually fell for it. They actually thought that it would never end. And when the market actually corrected, many of us were prepared for this. This was actually preempted to a certain extent through many different videos, I guess you could say, in Telegrams and Twitter. This was all covered in advance by myself because it was expected after such a huge bull run. Of course, I guess I would actually say the bull run was unhealthy, but the correction is healthy because it now shows that we are not in a bubble. It shows that crypto actually corrected and is now slowly recovering and fluctuating. That's why I laugh when I see that Bitcoin's in a bubble, because how could it be in a bubble if it's actually recovering and still trading and thriving overall in fundamental development? So that's just a good little example I wanted to cover as well. And just wanted to kind of give you a heads up when you see in the Telegram that we're overall focusing on these targets here, but then suddenly I'm like, Bitcoin could drop to $4,800. That's because it can. And you can use that information however you please to either set buy orders in advance just in case it spikes lower. You can do that to move your stop loss in profit. Or guess what? If you move your stop loss halfway and price doesn't drop lower and you're in a long trade, guess what? It explodes higher. You've made profit regardless. So if price starts breaking out and your stop loss is halfway and it reverses against you, you've taken 50% profit off that trade. If it doesn't hit your stop loss and continues rocketing, you've still made money. However, covering these downside targets allows you to be prepared for these future movements and what could potentially be a massive stop loss hunt. You have to remember, stop loss hunts are enticed to wipe out stop losses at break even or in losses. That's because many people will be seeing breakouts like this and entering their stop loss nice and tight. So let's just say the breakout of this box has happened here. You're going to put your stop loss just below this candle here because it's propelled so far to the upside. All you're thinking in your head is, oh my God, higher highs, it's going to blow, and then bang, it comes straight down to the stop loss. And look, even if you put it below the box, you would have been wiped out. That's why it's best to just keep it close to price, because when it falls, it is going to fall like no tomorrow. The same way when it rises, it will rise like no tomorrow. So let's just go to XR. Actually, no, let's go to this first. We'll cover this properly. First of all, there is a lot of focus for me on the daily time frames right now. Again, I've started showing some Fibonacci levels as well. So let's have a little look at this. I'm going to show you how we do the Fib tool again. So you have this here. First of all, 61.8 perfection on that level there as covered. Look at the target over there aligned perfectly between the levels and of course with this. Now I do not really see 5,600 being met, but you never know. You absolutely never know. So I may potentially enter a short depending on how we react around these regions, targeting at least around 4,850. We'll see how we dictate from there. Now let's make this a bit more professional and drag this down to there. And drag this up to there. What do we see occurring right now? Because this looks pretty good to me, to be honest with you. We have a body-to-body Fibonacci. We have the 78.6 met. We have perfect taps to the 61.8, perfect tap of the 78.6, tapping higher around this region. However, the 4 hour right now is just fluctuating between this zone. We have not really broken through. We have not really closed below. We are perfectly fluctuating between this region, spiking exactly where prior spikes have occurred. Now, if I just extend this out all the way over there, 1, 2, 3, 4, 5, 6, 7, 8 candles have now spiked this particular region. Sell orders are extremely strong in this region. Even when they break through, price has failed now for 4 days in a row to actually annihilate that region and continue higher, which leads me to believe many people would be expecting a breakout. So even if you're long, what is wrong with projecting the counteractive side of the trade? So looking at this here, first Fibonacci target aligns perfectly with the prior manipulative region and the lower spectrum of this box here. The second target, well, Lord and behold, it literally is aligned with the 2 wicks here. And if I drag this a bit higher to actually align with this instead, just to be a bit more precise, it's the 4,850 region that was covered earlier, exactly here. The reason this level is covered because it's just the main level, 4,700, nice round number between 4.8 as well over there. And we have the overall long-term daily moving average aligning with this region as well. So looking at this level, the reason I even had it marked was just because of prior wicks, how they've been responding. Breakout, retest, retest, prior reversal there as well. Just keeping it nice and clean and simple and just having these levels marked in advance. So what I will probably do upon further confirmation of this next 4 hour candle, judging from this right now, I believe this is going to be a very nice climb down to this potential zone here. This does not take away from the overall long-term bias. However, you can be cautious of this because, as I said, as a swing trader, you can literally see it dip down to here. What's an excellent place to buy more crypto and BTC if price spikes down to these regions, because that way, when it then hopefully reverses back to the upside and whipsaws to 6k or 5,800 or even back to the highs, you have made a significant profit off your physical coin purchase. If you are margin trading and you have a stop loss on a long running, let's just say you've taken my call, you're in very good profit right now, move your stop loss up, it pulls back down, you've taken profit, it dips to this region. Or you could leave your long running and you could leave your short running. However, I wouldn't really advise doing that at this current region unless you literally had to stop a long running from like down here. If you have longs running from very, very low levels and high, and let's just say price is now very high, you can actually enter short positions as well. However, best not to really get involved in that stuff. It can be very complex and tricky. But using this as an example with a long position running, pulls back, takes your profit out, spikes to these levels here. All you do now is re-enter long again and ride the same wave back up, because when you go to the weekly, etc., the overall fundamentals have not changed. All we've done is broken out for a level, and as you can see, we actually haven't really retested this level, which I'll mark out here and extend out slightly. We haven't actually retested this level since breaking out, so it actually does make fairly good sense that a potential retest could occur of this region. But overall, look, the highs are there, and when you zoom out on that weekly perspective, it does not make price bearish. We've had a huge upside explosion. It's happened here before, here as well, many times over, and even if it happens, it does not mean the week will fail. As you know the rule, the 50% correction, the 25% correction, the quarter to halfway of the prior weekly candle's body, and then price reverses even higher. It's just a very common occurrence that happens all the time in the markets. A good example, guess we'll use this. Actually, no, let's do it from here, from the candle closure. There you go. That exact movement from there, from the prior candle's closure, spiked around 50% of the way, pretty much aligning with the targets covered here, and then it continues higher. So you're basically counteracting your own trades to protect yourself, because instead of being manipulated by the market, why not theoretically manipulate yourself? That is how I see it. That is how I've always angled the charts, and the reason why it can sometimes seem irrational to some people is because they do not understand the procedure of protecting yourself. It's the same way. Well, it's just simple. Why be manipulated when you can technically manipulate yourself and avoid yourself getting manipulated by someone else? It's these little ways of looking at the market differently to the majority that can make a large difference. Now, I know there's been a lot of hate, for example, on my Telegram comments by some people or other pages who do not really understand this process. That's because they just do not have a clue. I mean, you actually can post several different biases to the market, and seeing as I'm responsible for so many people, why would I not be posting analysis that can literally save you guys money and make you money at the same time? It's the same way that the XRP call hit 0.34 cents, but it does not mean I'm now going to start claiming bull run, bull run, bull run, because yes, we already know the targets have been covered, 38 cents, which we already tapped, and upon a breakout, we will start expecting the 44 cents regions and beyond. But what's happening in the meantime, we have to pay attention. There are several rejections of this region. We have a trend line coming into play here. What could be occurring in the short term? Let's go to the 4-hour chart. So again, let's just see how this candle reacts. But look at that precision, 0.342 on the dot. The candle spiked to and reversed. What does that mean? A significant amount of sell orders were placed at this region. So price now price may now be coming to attempt to break through this region once again. But if price is spiking precisely to one level and pulling back lower, that means there were sell orders set there in advance, which means it may not do too well when it attempts to break out. Now, looking at these potential downside regions and what's occurring, let's just say BTC follows through, seeing as the dominance right now is at 52.3%. We are using BTC as our main guidance, and considering XRP has now fulfilled a fairly significant move higher, I am pretty confident that although it may break out and start exceeding to 36 cents, it could follow in BTC's footsteps, and let's look at where that could potentially lead it. So extending this trend line now to where it really should be, over here, let's just say from there, now it makes more sense, because remember, there's the cheating trend line and then there's the real trend line, which is located just here, as you can see from the wicks. I always use the externals when it comes to manipulation, and that's the first rule when it comes to spotting the manipulation on charts. If you are not extending to the wicks, it may look completely unrealistic. Again, we'll adjust that later. I can't bother to really make it perfect, but even here, I'll show you this. Extending it to that wick there on the weekly. There we go. 1, 2, 3, 4, 5. Nice. Even though it may look unrealistic at certain times, for example here, look where price exactly spiked during that manipulative spike, directly to the trend line. We then surged higher. After a huge pullback, people thought we were going to break out. We died again to the trend line. So if I get rid of this for 1 second, you have to realize the first step to spotting potential threatening moves is to use the external trend lines from wicks to wicks. This means many people will not be expecting this because they'll be cheating and using trend lines like this, expecting it to hit there and melt. However, what will happen is it will melt down to here and trick you into believing it's going to reverse. You will then enter a long position, but then it will spike even lower to here. So let's drag that back to there and look at this level here, 0.30 cents. If this spikes down to here, I do not really see it breaching much lower below the 30s. I don't see that as a considerable threat just yet. However, if BTC obviously goes a bit above and beyond and starts dipping to 4,700 or a bit lower, then we can potentially eye up this level just below as well, which is around 29 cents, but I do not really see that happening just yet. However, caution will be applied just in case that does unfold. Now, taking this into consideration even further, we have the external trend lines very easily able to unfold in real time. We can see that happening. First of all, as well, looking at this rejection here, price has broken through a major support level of 34 cents. Rejected. This could lead to an even sharper downside fall. And before we actually know, we'll get to Ether first and continue with this theory as well. So here is why I trade these three together, or at least analyze these three together. So we have the original upside arrows here in anticipation of a breakout, which I will extend here, because even though I do now believe the market is going to reverse slightly, I'm leaving these here because when it does so, I believe this theory will unfold. A breakout to this sort of level, retest, test the box zone and break out. That's why you can change very last minute in this market. When we were first breaking out from the second period and I was expecting it to break out, I had this marked ready. However, in a heartbeat, if I see threats, I will change. This is what many people are afraid to do. They're too afraid to be wrong. They're too afraid to, it's not even being wrong, it's actually being right by technically trying to be the big shot or trying to be the egotistical one that doesn't want to be wrong. However, if I am seeing an overall upside breakout towards this level, but in the meantime there could be a potential downside threat, I actually consider that being right versus wrong, because you are saving yourself money, you're saving people money, and you are just being a bit more realistic instead of potentially waiting for price to break out here, but then when it's going through all these volatile moves and then potentially missing out, getting your stop loss hit or losing opportunities to buy here, then you are technically cheating and lying to yourself, because you're technically saying, let's just get this as a good example. Let's just say I called price to go straight from, okay, here's a good example. Let's just say here, I called price to go straight to the $190 region. We then spike higher, we pull all the way back down, and then we continue going higher. In the real world, especially in crypto, this is a huge and significant move to take into consideration. If you are not being prepared to potentially see this unfold, then you are not really doing your job essentially. And as a trader, you have to be cautious. Why would you want to be on the wrong end of this move? Even if you are targeting the potential upside and you're willing to swing trade for so long, why would you put yourself through several weeks of bearish momentum and draw down for the overall longer term picture? It's more wise to actually take profits along the way, potentially find any threatening counteractive moves and just profit from it. I don't understand why people would not do that. So here is my theory behind Ether as well. Looking at this right now, we have 1, 2, 3 external trend line, and trend lines normally work in multiples of 3, the third bounce being the most significant and the one that usually causes a breakout to either a downside or upside movement. Using this zone as well, we're back within the box zone. Look at how many times this region has held and failed to break higher. Even the spikes haven't necessarily been too big. There is the only threat of that spike up there. However, that was a major stop loss hunt, which I've never really seen anything like that before. And looking at this now, taps this level, tapped up here. We haven't actually broken through, considering such a huge reversal did occur from $155 up to $168. We did not see that sufficient breakout just yet. And now that leads me to believe with such a slow down momentum, similar to the movements here, pullback, pulled up higher, failed to break, and it wasn't too sharp. It just slowly declined over several days, back down to where the prior price action occurred, as you can see, and then it just reversed higher. And the same could be occurring for these levels. But using Ether as a good example as well, ideally BTC, if it isn't too threatening, it will just tap the box zone. And the same goes for Ether. We have the box zone to pay attention to, around $155, and we have the trend line as well. Now, Here's something I discovered the other day. Let's just get that drawn up from body to body on the daily. We have the 156 region here, where the prior bottom of the box is, and lots of manipulation around this zone. Just below, we have the $149 region as well. Upside targets aligning perfectly in the center, $205 of our region here, and the upside not too particular, but as you can see, looking at where prior rejections have occurred as well, nice little Fibonacci setup to take into consideration. Looking at the downside, 78.6, candles galore, manipulation galore. Any threatening downside spikes could easily lead to around a $20 drop straight to these zones as well. Now, as someone who is potentially riding this long trend, let's say you've entered here, you do not have much to worry about. You could literally leave a stop loss at break even or just below. If you are entering from these regions here, stop loss please, because if it spikes lower, you take your profit, you re-enter around these zones, nice and tight stop loss. You've now entered at a peak and optimal level, being a trend line or a Fibonacci retracement. You now have a huge Goliath move to capture from the other end. So it goes without saying, we've pretty much covered those levels. Let's just use BTC now as a good example on how to actually start identifying these rejections. So I'll get rid of this. I'll get rid of this Fibonacci for now, keep it nice and clean. Let's make that nice and small again. We do not want that that was actually too small. It's now non-existent. Let's now drag this up to around there. Do not want to cheat and drag that up because it was pretty much left at this level as well. I will not drag it higher. Now, using BTC, besides the fact we always have external trend lines, and you can use even BTC, to be honest with you, look at this. You have that there. I doubt that will be fulfilled, but over a longer term period, upon a spike, it could slowly fluctuate its way down. And on top of that, from here to there, we have this trend line here. This could come into play, and again, something to take into consideration. The first step to identifying manipulation is preempting levels in advance. This is why trend lines are so crucial, especially wick to wick, because as price starts to really get away from where the main trend line is, it will always come back down to retest it at some point. And your best way to actually identify this and locate where price could be reversing is using the price action overall. If we are seeing a slowdown in momentum to the upside, it means it could be time for the bulls to take a step back, let the bears take over. Because the way I see it is, again, following on from the last Wizard Wednesdays, I essentially see it as the bulls pushing. Eventually, the bears are just so dominating. The bulls just give up. They're like, do you know what? We'll take a step back, let the bears have their moment, let them kick back down, and then the bears start pushing their luck a little bit. Let's just say to these levels here, and the bulls just kind of go, do you know what? You're taking the piss a little bit now. I don't think you should be doing this anymore. The bulls then reactivate themselves and they continue pushing higher. So it's essentially a game of tug of war where you kind of just give up from exhaustion, and this is exhaustion. So the first level is identifying where the main trend lines are as potential threats and just being patient, leaving your trade to run in profit with a tight stop loss and just waiting for a pullback. Do not enter the minute it breaks lower. Wait for those key levels to be met, because it's very often that you will see price push up, for example, here. Let's say you are waiting to short there. If you enter early, price will normally follow through. Same goes for here. Taps this level again, and yes, it would have been an excellent short, but look, broken through, rejection, slowly crumbled lower. So there is a matter of patience in this game as well. And let's use this as an example. So, pretty similar distance overall, 1, 2, price is now rejecting higher. Oh God, what's going to happen? Is it going to break higher? Because it technically is breaking higher. Bang, touch the trend line first, it explodes to the sky. The same thing that could potentially be occurring here. Pulls back, taps, and then bang, straight to that level. Now, let's extend this bad boy over here, this huge Goliath candle from that trend line there. Well, I mean, it pretty much speaks for itself. It's looking very promising, and it's looking like this could be what could unfold. So again, more prior price action coming into play, and this is very important for spotting prior manipulation as well. It's actually looking at these candles and using overall approximate estimates to see how price could be unfolding over the short term. Let's see if we can find any more examples on a trend line just quickly before we continue. I mean, I guess this trend line as well, that should come through pretty smooth. 1, 2, 3. Now, looking at how far price went, would you really believe this trend line would be there to be retested again in the future? And actually, it did get rejected again, as you can see from there. We covered this before upon a breakout. So it actually rejected a fourth time as well, but it did break eventually in the end. But looking at this, guys, this is a good example of why the wicks to wicks are drawn, because you may get too excited. Now, let's just say you've done this. Could work technically as well, but I don't really believe in that stuff. So let's just say this, and you drag it down to the body. Okay, it's met there, and look at how it's actually precisely hit this level twice, well, actually 3 times, 1, 2, 3. So let's just say you've gone from wick to body, which isn't really ideal. That's why wick to wick is always efficient, because the average Joe and the person that's a bit too impatient and greedy will try and enter upon a potential third trend line bounce. However, little do they know, because they haven't used their brain, if they extend to the wick to wick, they've been wiped out, because the traders that have been prepared for manipulative levels, the wick to wick levels, already know there is potentially going to be a push. Now, how long did it take from there to there? So from that rejection, it pulled down. You're thinking happy days, let the reversal commence. What else have we got? Is that Fibonacci? I think it is. Not bad at all. That's a pretty big trap, actually. That's quite unfortunate. So you got the 61.8 there, pretty scary to see. Although it took months to actually fulfill that Fibonacci level, it did unfold in it would have been profitable even to short from there. But looking at this level, guys, let's just say you've preempted it, you've jumped the gun because you've drawn the trend line however you feel like. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So it took around 2 weeks of agonizing pain and wait for price to then eventually explode to the upside target and then melt its way lower. And that is why the daily time frame is so important, because even if price breaks out higher and it hits your profit target, when you zoom out from the daily and weekly perspectives, you start to realize that it really could unfold towards your target. And that's why I'd say not to really focus too much on the 1 hour or the 4 hour, unless it's for intraday purposes, because looking at this now, the 1 hour looks very bearish to me. It looks like it could easily fall to 5,160, and the 4 hour is now looking pretty promising as well. So I do believe that a candle will try and attempt to fulfill this wick once more. If it breaks that wick, then we could be seeing a nice meltdown coming forward our way very soon. Now, the final point to mention is using the daily and the 4 hour, but mostly the daily again, to preempt where prior spikes have occurred. I know that sounds generic. I know that sounds like something we should all know, but many people do not use that to their advantage. Now, with these prior downside spikes, even I wasn't paying too much attention. Where did price land to? 1, 2, 3 times. Exactly within this region here, where prior spikes have occurred. If I get rid of this box, you can see that actually, let's just drag that even higher. Price broke out, rejected back into this box, a little few spikes below, just to stop loss hunt a little extra. But overall, using the prior regions here, we broke out, we then rejected down. Now we can continue and potentially drop even lower once again. So price is basically going back and forth to where prior price action occurred, not to mention support and resistance. If there's a crucial level where price broke out from before, it's very likely it's going to do so again. And we can show that from this level here. Breakout. I mean, it looks amazing. You just think it's going to go straight to 4,600. Look at how many times this level's held. Breakout, it plummets all the way down from 4,200 back down to 3,800. Again, not too significant. It's only a $400 move, but when you're using that 4 hour time frame, look at where it just sharply drops directly to. Breakout, rejection. What's going on? That's a bit scary. Bang. Straight down, touches the level, bit of consolidation, a bit of a spike, but you can use this in advance to actually preempt your stop losses as well. So let's just say right now, BTC, here's what I'm personally going to do. Again, waiting for that 4 hour to potentially short, or maybe even a spike up here. But even if I entered short now, my stop loss would have to be at around 5,423. So around a $200 stop loss is not too bad, give or take, but we are potentially targeting what could be around $400 to $600 movements. Now let's just say price does drop down to the projected trend line here. Stop loss can literally just be just below. Even here, 4,500 for a potential huge swing going over $1,000 in movement. So the risk reward as well should always be in your mind when looking at manipulation, because almost every single time before exploding or continuing higher, you're going to see a necessary pullback of some sorts. Even here, as you are melting lower, huge swings on the daily, huge swings, but overall, the bias still remained for the overall long-term image. And this is why, although let's just say you're projecting a short from here all the way down to there, and there's your stop loss. Now, I'll make that a bit clearer to see. Let's just say price is slowly climbing here. Yeah, fair enough, if you caught it from there, it's okay, but why not try and make money from these procedures as well, or at least be prepared? If you have your stop loss, let's get that stop loss whipped up very quickly for one final time. Single line of stop loss. You've entered here, you're slowly dragging your stop loss down. Okay, you already understand Fibonacci levels. You've got a moving average here as well. Support and resistance. Price broke out from this level. Pulled up, tapped and reversed lower, tapped and reversed lower again and again and again. And remember, there's also Fibonacci's within Fibonacci's as well to take into consideration. There are many times price can come back. Good example here. Bang, tapped, broke out, rejected, broke out. Again, just held its way before snapping. You can literally use trend lines to your advantage. It's really not hard. It's very simple. As long as you leave them there, although it looks unrealistic, they are likely to be met. So to wrap this video up, guys, I hope this has been informative to some extent. I just wanted to kind of give a different outlook to how many people view or trade or scalp or even invest in this market overall. And it's just little tips like this that I believe over time that will overall build you as a much more solid trader and investor, because the first step to being prepared and avoiding manipulation is to technically manipulate yourself and look at it in the eyes of an institution. I know everybody says trade like a banker, think like an institution, but no, you actually have to try and catch yourself out. That is the secret. That is something that I've been literally practicing. It's like when I take a trade, the first thing I do is I look at the trade and I think, if I was an institution or a banker or whoever I may be, how would I catch myself out or every other retail trader within this game? You almost have to trade like you are an institution, and then look at the chart. Let's say here right now you're a bank. You're looking at the charts right now as an institution, a bank, or whoever you may be, a whale, and you know this looks like a very easy long breakout, and you're thinking, right, people are probably buying here, they're probably buying here, there must be stop losses, because again, when there's huge reversals and bullish candles like this, people often put stop losses just below. So if I'm looking at this right now as an institution, I'm thinking, okay, huge reversal, another huge reversal, I wonder how many people have now gone long. What can I do to make even more money before continuing with the overall market momentum? That's right, I will dump a shitload of crypto into the market or capital, short the market, I will wipe out all of their stop losses, I will then re-enter after they've all been wiped out and make even more money on the way back up. So you're essentially counteracting your own trades to make money along the way in every single direction. It's just something to look into, something that will take a lot of practice, and again, use this in line with the crypto technical analysis lessons I've provided as well, and I believe you will be on your way to success much quicker than you actually believe. So guys, hope you've enjoyed that video. Again, please like, subscribe, spread the word, let your friends know, and also leave comments. Let me know what you want in the next episode. What is it you guys are stuck with? Do you have difficulties with any subjects or topics, or there's even technical analysis skills in particular? If there's anything you're stuck with, let me know, because they're being incorporated into the podcast and they will be incorporated into the Wizard Wednesdays. I'm here to help, I'm here to educate, so please just let me know what you need and I'm more than happy to cover it all. So guys, have a good Wednesday and I'll be seeing you in the Telegram very shortly.